and there is a strike, expect more supply chain problems and higher prices as a result. Jonathan Hoenig on that, Michelle Snyder also joining us on that. Great reads of markets and economies all. Michelle, we get something like this happening, no matter how long it lasts, it's going to further put a strain on the supply chain and further lift prices, right?
Absolutely. It seems like whatever the resolution is, whether it's some kind of a negotiation that averts a strike or a strike itself, it's really just another factor in the whole macro that we've been worried about now for so long, which is getting supply and demand in check, keeping supply chain from getting too tight, the labor market, which is tight, which is clearly part of what's being taken advantage of, and keeping inflation under control. And tomorrow's CPI numbers, which I think people expect to be softer, but this certainly won't help if it actually comes to pass. Either way, rising wages or no goods getting delivered.
You know, Jonathan, you're getting a sense that the administration is prepared to say we're making progress, this is the worst of it. Something like this goes and happens, that all bets are off, right?
Well, Neil, of course, the fact that there's so much demand for higher wages goes against their hypothesis of how inflation is coming down. In fact, just the opposite is happening. We're talking about a $2 billion hit to the economy every day. About 30% of all freight travels over the rails. So this could be a major impact on the economy. And Neil, what's so frustrating is that so much of it has to do with government and caused inflation. You know, the average rail worker right now makes about $135,000 a year. What's on the table is $160,000 a year. Who pays for that? Of course, employers, consumers, whether it's not in higher costs at the grocery store, but it's higher, lower quality of life when it comes to Christmas gifts or anything else in the economy as well.
I'm wondering about that and the consumer impact then, Michelle. I mean, a lot of people were hoping that, and certainly Apple is hoping, and I guess in a couple of weeks, Samsung announcing some products and pricey phones of their own, that there'll be a pent-up demand for this sort of thing, especially since both are maintaining price levels where they were last year. But even at that, I mean, the consumer's pretty restricted right now. So how do you see it sorting out?
Well, I know that some are already starting their holiday shopping in advance. I mean, my first reaction when I heard this story today was, gee, if there's anything I want to have delivered, I better order it quick. And I would assume that that's probably the philosophy of lots of consumers. But yeah, I mean, to pick up on what Jonathan said, we are in an inflationary environment, and this is just another example. And these rising wages, you could take the other side and say, if you look at CEO salaries versus regular worker salaries since 1980, the ratio is 1,008% to 1. So people are using this opportunity in any way they can to try to get higher wages, obviously for themselves. And the consumer is sort of stuck in the middle. And really, it's going to be, I think, down to what the Fed decides to do about all of this when they come up September 21st. Are they even factoring this in?
I don't think the Fed is prepared for a pickup in inflation again. But I could be missing something, Jonathan. What do you think?
Well, Neil, already bonds have had the worst year in history. That's how big this move up has been in inflation. The bond market has lost about 11% just this year. The previous worst year was about 3%. So already we have had trillions of dollars lost because of that inflation. But Neil, I tell you, when it comes to the rails, it's not just inflation, it's also the unions. Keep in mind, the unions, Neil, have bankrupted the U.S. automakers, the U.S. airlines, the U.S. schools, many would argue. Now they're having the same impact on the U.S. rail system at a time that we need those supply chains to be crystal clear, not muddled by union intervention.
We'll watch it closely, guys. Thank you very, very much. As they